first start with the global setup. What do we have on the global setup? The global picture is that crude prices did not flare up on Monday, but they have collapsed on Tuesday. So there was no flare up, there was a spike and there is a collapse. So the immediate reaction is crude prices have actually almost come back to what could be called as the pre-war level. You know, we were in 62, 63 range before the war broke out in Middle East between Israel and Iran, and we've almost retraced everything. So this bump up which happened because of supply constraints, that is over. So from a market standpoint, geopolitical tensions are a no-show and it has not impacted the market per se. But meanwhile, while this entire rumble and the tumble in the geopolitical in Middle East was there, the currency market seems to be giving us a very different cue, which I'm surprised nobody is talking about it. So let me throw in one more ingredient in the melting pot, so to speak, and I think it's the dollar index, which is now almost at 97.5. So for me, that is the big talking point right now, that from commodities, the puck has moved to currencies, and weakness in dollar index, in a sense, will ensure that Indian markets, in a sense, will continue to remain in some kind of an attractive zone. For me, this graphic matters because yields are at 4.2. The dollar index is at 98 or sub 98 and volatility has not gone up. So we are starting with what could be called as a encouraging set of global cues. You won't use the word wow, but you would say that where we were same time last week, we were surrounded with concerns. Today, I think it is stability which really could be the appeal. Market, let's look at Nifty, Snehi, and then we'll talk about it.
So Nifty, yesterday, in fact, we've seen a cut of 300 points from the day's high.
In a sense, has been this line in the sand. We've been going there, coming back. We've been going there, we've been coming back. You know, rarely markets remains flat for such an extended period of time. Kunal was telling us it's been, what, 32 days now. We add one more, it's 33. For 33 days with this kind of a noisy environment where, you know, there has been geopolitics, there has been war, there has been monsoon. A lot has changed in terms of news flow for the world in last 45 days. Indian markets have been hugging on to a straight line, and that also includes what happened, you know, between India and Pakistan. So despite geopolitical tensions, local issues, monsoon, onset of early monsoon, markets have been hugging on to a flat line. That's not going to be permanent. Markets will certainly not hug on to a flat line. So where I think markets are headed? Well, the path of least resistance, looking at the global setup, the FI setup, I think is up. But rather than markets exploding on the upside, I think it's going to be a tough trek. There's nothing wrong with the macro setup. There's nothing wrong with the micro setup. The challenge is that in this kind of an environment, when macros are looking appealing, global investors and local investors are ready to invest and ready to increase their allocations. But the supply at the promoter level, whether it is a stake from BAT or promoter selling of Indigo or bunched up QIPs or big IPOs, all that has started hitting the market. Now, what that will do is that you actually will see some kind of an imbalance between supply and demand. And not an imbalance, but a perfect balance, I beg your pardon, perfect balance between supply and demand. And I think that for me is a restrictive factor right now. So it's going to be a trek up in a setup when everything is looking good, and that's largely because of the factors I mentioned. If I give you these set of circumstances, and I say, okay, predict the markets, dollar down, crude collapses, FIs are back, macros are looking okay, bond yields have come down, RBI has cut interest rates, you would say, okay, market should be just in a...
Looks optimistic.
You know, the market should just be rallying. But markets, despite that, the upside is getting canned. That's largely because when there is demand, there is also supply. So new money is buying additional supply. For markets to go up, new money has to buy the same shares.
Existing.
Right?
Correct.
That's how markets go higher. So that is where I think the markets are getting jammed. But what will happen, and I think what is happening, is that the confidence to now chase mid and small cap stocks with each passing day is increasing. And after the rumble and tumble, what we've seen there, I think that space will continue to throb with action. The risk for this market was global setup, and we've not had a big concern because of that. If at all, because of the war, there is a pronounced weakness in the dollar index, which in the short term, medium term and long term is positive for us.
Absolutely. So, well, lots of thoughts on that. You have currencies in focus, crude has simmered down, but lots has happened overnight.